Hello, what's going on? Welcome to my channel. In this video today, I want to go over the quarter one Tesla 2022 earnings that just came out not too long ago. Yeah, they got a $16.8 billion in revenue. That's an 87% growth rate quarter over year. I guess year over year, but yeah, so basically last year, 2021 quarter one, they're doing 87% more. It's almost a double in revenue. Okay, of which 679 million was regulatory credits. And why I want to point that out is because I hear this all the time, like, oh, Tesla's only profitable because of these regulatory credits they get. And what regulatory credits are is basically every manufacturer is required to produce a certain number of EVs percentage-wise to their ICE vehicles. And because Tesla is 100% EVs, a lot of manufacturers can't catch up, so they pay Tesla an amount, and they basically get money because they're using Tesla's EV numbers to balance out the ICE vehicles they're creating, right? So what this tells me is that a lot of people aren't making their EVs this quarter, right? Because they have to pay Tesla more money. And the reason I want to call this out is because I hear a lot of people say, oh, Tesla's only profitable because of this regulatory credit, which obviously isn't true. They made $16.8 billion in revenue. Only 679 million is from the regulatory credits. So that is higher. That is higher. So I guess 679, yeah. So last quarter they did 314. Now they have an extra 300, almost 300 million. This is money that they're still getting. But I bet you're gonna hear from Gordon Johnson. They're gonna be like, oh yeah, they got an extra $300 million. Like that is negligible. Okay. What's also crazy is they're at gross margins of 30% without the regulatory credits. Okay, so without regulatory credits, they're at 30% gross margin. Okay, so every car they make, 30% of that is profit. Cost of goods sold, right? What's even more crazy, you're at a 19.2% operational margin. Okay, 19.2% operational margin. I don't know if you understand how crazy that is. Like Toyota is at 9.9%. Ford is like, I don't know, probably less than 10%. It looks like Volkswagen is probably around 6 or 7%. These guys are at 19%. And last year, this quarter, they were at 5.7%. So what they're doing is they're getting more and more efficient. They're cutting down costs and just growing their operational margin like crazy. And that's all profit, right? I don't know how to stress this enough. This is the growth trajectory of Tesla is really insane. They went from 5.7 to 9.2. I think last quarter they were at, let me pull it up here. They were at 14.7. So they grew 4% in just one quarter. All right, and this is including the fact that they have a lot of issues. They have supply chain issues. They also have like they're ramping up 2 new factories. So that's just an insane number. Earnings per share is 3.22, and I think they were trying to. I think the estimate was like 2.5 or something. So they really killed it. Other notable things is they have no more debt essentially, other than financing, and then their EBITDA this quarter was $5 billion. $5 billion in earnings. What does that do with their P ratio, right? An argument I hear all the time is like, oh, like Tesla's P ratio is insane, doesn't make any sense. But like every quarter, their P ratio is just dropping almost by like 40, 50, 60, 70%, right? So right now at the price point of $1,020 or whatever the price is, they had a P ratio of 200. Now that you remove the previous quarter one 2021 earnings and you add quarter one 2022 earnings, that P ratio drops by like, what is this, like 40%, 50%? I don't know, not 50%, 40%. All right, so that P ratio is going to get cut lower and lower and lower, which means the stock price is going to run higher and higher and higher. Okay, so yeah, these are really insane numbers coming from Tesla. Some other things from the call. Obviously, as you know, Shanghai factory has been shut down for like almost 3 weeks now. But Elon actually said quarter two might be a little bit less, but possibly even the same. So that means they're really going to be ramping up their production. And he also has said quarter three and quarter four are going to be much, much higher. Austin and Berlin are going to ramp faster than Shanghai did, obviously because they learn more. They're better experts. Their expertise is getting better and better. And then also I mentioned this earlier. They got $288 million in regulatory credit, which I think means other manufacturers are sucking because they're not producing enough EVs, right? So basically, Tesla's getting free money. They also said, yeah, we're going to continue to grow 50%, right? Maybe 60%, right? So they say that they've been saying that. I think they're sandbagging, but this leads me to my point. Why is Tesla a very safe investment, in my opinion? Because they consistently prove that they can grow 50% no matter the scale, and they're also they're going to be growing 50% in terms of manufacturing. You can kind of work that math back, right? So probably stock price will follow that accordingly as well because their profit margins are actually increasing, not decreasing, especially the operational margin. And I think they're sandbagging this number too, right? So, like I said, that's why I think Tesla is a safe investment, but also there's a lot of opportunity for growth because they're growing 50%. Like, I don't know a better investment than Tesla in terms of risk and also opportunity. Okay, so robotaxi type of. Oh, so another thing that they're doing, which is kind of interesting to me, is that they're actually producing a different type of car. It's gonna be a robotaxi only. So I don't think it's gonna have like any driver in it. It's gonna be only robotaxi. What that means is that they have very high conviction in their FSD, and they said that the cost of riding this will be probably even cheaper. Like cost per mile will be even cheaper than a subsidized bus ticket or a subsidized train ride, right? So that's gonna be really insane in terms of how cheap it is to travel. And they also mentioned Cybertruck coming out next year. I don't really care about that as much. Another thing that's super interesting is like the insurance, right? So once again, Tesla has the most data. They know how you drive. They know everything about your car. They know what accidents there are. They know how much it costs to replace these accidents. And they're launching insurance because they have all this data, right? So they can offer a much cheaper price point because they have a lot more information, right? So people are saving hundreds of dollars a month. I think like $200-300 a month just from switching over to Tesla insurance. Their goal is to get to 80% of the population of the U.S. to have access to this insurance. And what it means is it's fully integrated insurance. So they know everything about how you're driving. They know everything about the cost, what your car is doing. So if you're driving safer, they can actually real time give you a cheaper rate. Right? If you drive more shitty, it's going to be more expensive. So you're actually encouraging people to drive cheaper because you get that feedback right away. Pretty interesting thought process. Pretty interesting if you think about it. So that's a whole nother revenue stream for them right there. But I think it's more about, hey, like you're actually offering a way better experience for your people that are buying your cars, right? Okay, so that's what I learned from the earnings call. Very happy with the numbers. They definitely blew my expectations out of the water. And yeah, so let's kind of go into the training I've been doing. Okay, so what I had done so far is I made a little bit of money this week. I made about $600, and I'll talk about that in a second. So I officially hit over 50K. So I'm now over 50K because that $600 put me over. I made 50K ever since I started this channel in July. And yeah, what I had done this week is last week I sold a covered call on April 14th for $1,100. Remember, I got assigned for $1,100. I didn't want to sell anything cheaper. And then yesterday I was like, hey, what if Tesla stock runs up after earnings? Let me close this out before it runs up, because it had already started running up. So then I just closed it out. So I paid $700 when I bought it for. I got it at $1,300 when I sold it. I paid $700 to get it back. So I made about $600. I could have got more from this, but hey, like I'm glad I got out because Tesla stock I think is gonna run up tomorrow. So so yeah, I made $600 for doing nothing, which is not bad. And here are the puts I have out. So I sold another put this morning. And then I had this 1,000 put. I had the cover call's not here because I got rid of it. But this 1,000 put definitely dropped. Okay, so the Tesla stock dropped today, and I don't know why. It didn't make any sense to me while it was dropping, especially when the earnings coming out. So I sold another put, a pretty safe put, $900 for next month, and I got 30. How much did I get for it? It's not here. I got 3,600 for it. I'm already down 400, but I think this is gonna go up tomorrow. So once I hit 50%, 60% growth, earning profit on this, I might just close it out and then. Yeah, I'm gonna try to start closing my things out earlier to get more profit. Like I could have closed this one out, way earlier and got like 50% profit. Instead, I held it and then it just went up and then went back down. So I'm gonna just kind of when it goes up, I'm at 50% or 60%, I'm just gonna close it, and then when it goes down, I'll sell another one. So yeah, I'm pretty happy with this one. I mean, even though it's down right now, but I think the stock price is gonna run up tomorrow. Like it has to. If it doesn't, then people are dumb. And then this one, this will run up tomorrow too. I'm not really worried about it. So. That's it for those puts. And then what I'm gonna do, yeah. So my plans are I'm pretty happy with earnings. I mean, you can't ask for anything better. Like the EPS estimate was like 2.3. Even the bullish people were saying 2.8. It got to 3.2. So things definitely went according to plan. I closed out my cover call early just in case the stock price runs up, which I think will happen tomorrow. And then I held on to my puts. So I think these are gonna print tomorrow. Hopefully these will be up instead of down by several $1,000s. And then yeah, hopefully stock price will reflect. Once stock price goes up, I'm probably gonna wait until depends on how high it runs. But if it runs up 1100, I'm gonna sell a covered call for something above 1100 for about a week out, and then I'm gonna keep doing that until I get assigned. And I'm continuing to wheel. So yeah, patience has finally paid off. Hopefully we go above 1100. I can sell a cover call for high premium, maybe $4,000 or $5,000 over a week, and then I'll just keep doing that till I get assigned, and then start selling puts again. So that's my goal. Hope this was helpful. Yeah, talk to you in the next video. Thanks. If you got to the end of the video, once again, please like and subscribe. Thanks. Bye.